record 58% of millennials are now homeowners as of this year, and the ones that have managed to find a dream house or any house are now helping fuel the renovation market. Joining us now with more is Liz Suzuki. She's a senior hardlines retail analyst at Bank of America Securities. It's good to see you, Liz. And okay, this makes total sense to me, but it sounds like it's still not enough demand to get us back to where we were in the middle of the pandemic when everyone was apparently buying appliances at the same time.
Sure. And thanks so much for having me on, Kelly. This is such a fun report to be able to come on and talk about every year because we've been tracking this millennial generation since 2016 and have seen such a big step up in how this generation has matured and is starting to enter peak home buying and earnings years. So it's important for retailers and home builders and the entire housing value chain to really be thinking about what's happening with this generation. And so, as you mentioned, it's a really tough time for affordability, but the demand is still clearly outstripping supply, which is why you still see home prices that are elevated. You see mortgage rates that are high. And as those mortgage rates start to come down, we expect to see a bit of, increase in housing turnover in the second half of the year. And so some of these millennials that have been on the sidelines or have just been anxious to get into the housing market will have that opportunity as we get into the later half of this year.
It feels like there's a bit of a lockup in the housing market right now. Interest rates are high, which means that there's a powerful disincentive for a homeowner to sell and trade their 3% mortgage for a 7% mortgage. So I think a lot of people are staying put. That's why there's so little supply on the market in many places. They're staying put, and maybe they're spending on renovations. Are you seeing that in the results of a Lowe's, of a Home Depot, of a Floor and Decor, for example?
Mm-hmm. Absolutely. In fact, that lock-in effect is really powerful, especially when you think about the amount of home equity that has been built up over these last few years. And so the 95% of homeowners who aren't going to move in any given year have a lot of equity to tap into in order to make their home meet their needs if they can't move into a new home. So we've seen a lot of big renovation projects that are continuing to happen. The backlog of professional repairs that have yet to be released is very much still a tailwind. And then we heard from yesterday from Floor and Decor. They did talk about how some homeowners are sort of downshifting into smaller projects. So they may be doing a powder room flooring project instead of a master bathroom. And like some of those renovations that would normally come with housing turnover, as in preparing your home for sale or doing renovations after you've purchased, those are going to be on the sidelines for a while until we get that pickup in turnover. So in the meantime, homeowners are still doing projects. They're just descaling a little bit or doing some of the smaller ones.
Home Depot is down 8% year to date, Liz. Some of the others, like you mentioned, Floor and Decor is up, 33%. Would you be, not to put it the way a trader would you be a buyer of Home Depot here? I mean, can they overcome what's been in this kind of post-pandemic slump?
Yes. I think Home Depot and Lowe's both look very inexpensive right now as stocks. They're trading well below their pre-COVID long-term averages in terms of valuation. And the outlook really is not so dire when you think about all of these homeowners that still have this home equity I talked about that are tapping into it and still making renovations. So the home improvement cycle is significantly less volatile than that of home building and other elements of housing. So in terms of the housing value chain, we think that home improvement is generally fairly stable and that this year is going to be flattish in terms of demand, which is coming off of very high levels. So for a retailer like a Home Depot or a Lowe's, which also has a very strong long-term outlook, and we still have this favorable supply and demand dynamic for housing, we think that those are great stocks to own right now.